Welcome to the Pro Ticker Deep Dive.
Okay, let's just jump right in. For the last, few years, these GLP-1 weight loss drugs, we're talking Ozempic and Mounjaro, they've completely defined the high-end health market.
Oh, absolutely. They were luxury items costing well over $1,000 a month.
$1,000. And that instantly made them, financially impossible for the, 130 million Americans who actually qualify for them.
Exactly. A massive clinical breakthrough that most people couldn't access.
Right. So everyone knew this price wall just couldn't last.
Mm.
And it looks like it finally broke with a specific policy action that forced what our analysis is calling a seismic repricing.
Yeah, that's a good way to put it.
So our mission today is to really dig into this pharmaceutical pricing agreement that was announced on November 6th. We need to dissect how it completely restructured the GLP-1 landscape and created these, very immediate winners and losers.
And what's so fascinating here, and what I think we need to unpack, is that this isn't just a simple price cut.
This was a high-stakes restructuring, and it really reveals the fundamental strategies of the two main players. You can see one company was clearly ready for this. This inevitability, really.
The price compression, yeah.
Price compression for volume expansion.
Yeah.
And the other, they were just caught flat-footed.
Let's get straight into the mechanism then.
Yeah.
This deal didn't happen through, the usual congressional debate.
Yeah.
The administration used some pretty powerful tools.
Very powerful.
The Most Favored Nation Framework, MFN, and the direct threat of Section 232 tariffs. I mean, that sounds like trade war tactics applied to healthcare. Why were those tools so effective?
That's a great observation, because they are. They're powerful because they just bypass that slow, grinding political process.
Okay.
MFN is normally for international trade, right? It just ensures you get the best price anyone else gets. Applying it here basically had the U.S. government saying, we demand the lowest price you offer anywhere on the globe.
And the tariffs.
Well, Section 232 tariffs are the hammer. That's a national security lever. By threatening to impose those on imported drugs, which is a huge pressure point, it forced their hand. It demanded immediate action, not negotiation.
So what were the actual numbers that came out of all this pressure?
The change is, it's just dramatic, especially for government payers.
Right.
The new structure means Medicare and Medicaid will now pay only $245 per month for semaglutide, Ozempic, and Wegovy, and tirzepatide, which is Mounjaro and Zepbound.
Wait, say that again, from over $1,000?
Down to $245.
Wow. That's not just a balance sheet thing for a company. That changes millions of lives, especially for seniors on Medicare. What about for people paying with cash?
So for cash customers, specifically through that system that's often called Trump RX6, the injectables will be available for $350 per month. That starts in 2026.
Still a massive discount.
A huge discount. But the real signal, the future of this, is in the oral drugs. Once they get FDA approval, they're slated to be priced even lower. We're talking in the $149 to $150 range.
$150. That's basically the price floor for mass market adoption.
That's what the industry is signaling, yes.
This whole thing really feels like a collision of these huge macro forces, doesn't it?
Yeah.
You have this incredible clinical breakthrough, the best weight loss drugs ever.
Unquestionably.
And that's crashing right into explosive demand and, this intense political pressure for affordability.
And the economics are now very straightforward. You trade margin for volume, you lower the prices, and you suddenly unlock this massive, previously untouchable market.
Especially now that Medicare covers Wegovy and Zepbound.
That's the key. That expansion makes mass access not just possible, but profitable at a huge scale. The political calculation was spot on.
Okay, so if you want proof of how the market read this situation, you just have to look at the stock charts right after that November 6th announcement. The reaction was completely divided.
Oh, it's night and day.
Let's start with Eli Lilly, ticker LLY. Their stock surged 23% between October 1st and November 12th. And on the day of the announcement, a clean plus 1.3% bump.
And the technicals tell the story, too.
Right. The 50-day moving average crossed above the 200-day.
And that cross is just critical. For anyone listening who's less familiar, think of the 50-day as short-term buzz and the 200-day as the long-term belief in a company.
So when the buzz overtakes the long-term trend,
It's a powerful signal that investors believe the good news is real and sustainable. It's justified by something fundamental. In this case, their pipeline.
now let's flip that. Let's look at Novo Nordisk and VO. Same time period, their stock went down 15%.
A 15% drop. Staggering.
And on the day of the news, they took a 4% hit. Their chart shows the exact opposite, a clear downtrend,
Yeah.
50-day plunging below the 200-day.
And this divergence, this split, it tells you everything you need to know.
Yeah.
Investors looked at this and said, Lilly can eat this price cut and actually grow from it, while Novo is in trouble. They saw structural headwinds.
Okay, let's dig into that.
Yeah.
Why is Lilly seen as the strategic winner here? It seems to start with their current drug, tirzepatide.
Correct. Marketed as Mounjaro and Zepbound. In the head-to-head trials, it just demonstrated better weight loss efficacy than Novo's semaglutide. It's, right now, simply the better product.
Okay, but here's what I don't get. If tirzepatide is demonstrably better, why would the government price it exactly the same as Novo's drug, both at $245 for Medicare? Isn't that just subsidizing the less effective option?
That is a fantastic question. And the answer really gets at how large-scale government negotiations work. Simplicity and budget predictability. They set one low, uniform price for the whole class of drugs. It's a political win, it's easy to budget. But, and this is the key, that uniformity actually supercharges Lilly's dominance.
How so?
Think about it from the patient's perspective. You now have zero financial reason to choose the inferior drug. You can get the measurably better drug, tirzepatide, for the exact same cost. It creates this silent, massive market share shift over to Lilly, especially in that huge new Medicare group.
So their current injectable is already set up to win. But the real ace of their sleeve, from what I'm reading, is their oral drug, or forglipron.
Yes. This is the game changer. This is what justifies that massive valuation for Lilly.
Okay.
Orglipron is on track for FDA submission by the end of 2025, probably approved mid to late 2026, and it's a small molecule drug.
Which means it's easier and cheaper to make it scale.
Much cheaper. Yet the trials suggest it has comparable efficacy to the injections and the price for cash payers. That $149 number we mentioned, that's competitive with generics.
But it's not just the drug itself, right? Lilly played the long game here. They secured some key strategic advantages in this whole deal.
They did, and this shows how far ahead they were thinking. They got a 3-year tariff exemption and an FDA national priority voucher for orforglipron.
Okay, the voucher I get. That speeds up the FDA review process. But why is a tariff exemption so important?
It's just brilliant risk management. The administration just used the threat of tariffs to force this price deal.
Wow.
Lilly has now protected its next blockbuster product from that exact same pressure for 3 critical years right after launch. They basically stacked the deck years in advance, knowing price cuts and regulatory speed were the 2 battlegrounds.
Let's shift over to Novo Nordisk then. For a long time, with Ozempic, they owned this story. Now they're clearly playing catch-up. What are the specific disadvantages that led to that 15% stock drop?
Well, it's a problem on multiple fronts. First, you have the market erosion. That's happening right now. They've already had to lower their financial guidance 4 times in 2025.
4 times.
Yeah, and they're citing competition from Lilly's better drug. That signals they underestimated their rival, and there's some internal instability.
And what about their pipeline, their answer to tirzepatide?
That's the second big problem. Their next-gen drug, CagriSema, was supposed to be the answer. But the phase 3 trials, well, they were a disappointment. It achieved 22.7% weight loss, but the target was 25%.
That 2-point difference sounds small, but in this market?
It's a failure. It means you're not best in class. And it delayed their filing until the first quarter of 2026.
So Lilly's oral drug is coming in 2026, while Novo's best new injectable is delayed and maybe not even as good. What about Novo's own oral drug?
They have one coming, oral semaglutide. But it uses the same active ingredient as Wegovy, so it likely has the same efficacy ceiling, and it will be competing against Lilly's cheaper small molecule orforglipron. They're at a disadvantage on both the injectable and the oral front.
Before we get to valuation, there's one other piece here, illegal compounders. For years, people were getting unregulated versions of these drugs for, $400 to $600 a month.
And this new pricing completely guts their business model. Why would you pay $500 for a risky, unregulated product?
When you can get the FDA-approved, insured, branded version for $350 or less.
Exactly. The moment that price point was breached, the compounder market was set to collapse. And all that market share flows back to the legitimate players.
Where Lilly, again, has the superior product, so it's another tailwind for them.
Another tailwind, yes.
So what is all this, the strategy, the pipeline asymmetry, what does it boil down to for investors?
Wall Street's verdict is pretty clear. Lilly is the compounding machine. It's trading at this very expensive 49.96 times trailing PE.
Almost 50 times earnings.
With a market cap of $914 billion. It is priced for absolute perfection. Novo, on the other hand, is the turnaround optionality. It's trading at a deep discount, 13.92x PE, market cap of just $223 billion.
So the market has already written Novo off for its failures.
It's been marked down, yes. The bad news is already priced in.
But being priced for perfection, that's a dangerous place for Lilly to be, isn't it? What's the risk there?
The risk is huge. Lilly is incredibly vulnerable to a sharp sell-off if that orforglipron launch has any hiccup at all. Efficacy, manufacturing, anything.
And what about new competitors?
That's the other thing. If Roche or Pfizer or Amgen comes to market in 2027 or 2028 with a drug that's oral and even better than tirzepatide, that 50x PE for Lilly could look catastrophic.
But for Novo, that deep discount,
Yeah.
it means any good news is magnified, right?
Yeah.
Where's the opportunity?
The opportunity is that asymmetric risk-reward. The expectations are so low. If CagriSema, in its next studies, somehow hits that 25% plus weight loss number.
Which is a long shot, but possible.
A lower probability event, sure. But if that happens, and if management can just stabilize the business, the stock could easily see 50% or more upside. The market would reward even a hint of a successful turnaround.
So for you, the listener trying to track this, what's the key catalyst timeline we should be watching?
You want to circle 3 moments on your calendar, late 2025. That's when Lilly submits orforglipron to the FDA,
Okay.
Q1 2026. That's when Novo seeks approval for CagriSema. The data they release then will be a massive inflection point for the stock,
And then?
mid-2026. That's when we'll see the real-world volumes from the Trump-Arcs plan, and we should get the FDA's final decision on orforglipron. That whole 18-month window is where this battle is won or lost.
So to wrap it all up, the pricing deal was basically a policy bomb that forced the industry to trade high margins for massive volume. Lilly was ready for it. They had the better product, the better pipeline, and they'd secured strategic advantages.
And Novo was not ready.
And the market's judgment was just swift and brutal. Lilly up 23%, Novo down 15%.
Which brings us to our final provocative thought for you to consider. Although Lilly has all the momentum, it's the predictable growth story. Novo's deeply discounted valuation actually offers a better asymmetric risk-reward profile.
If.
A very big if. If you believe management can pull off even, say, 60% of their turnaround plan over the next 18 months, that Q1 2026 data for CagriSema, that's the moment that bet either pays off big or it fizzles out completely.
See you all in the next Pro Ticker Deep Dive.